Hello, folks, and welcome to your Onchain update for the 9th of March. So we're going to spend a bit of time in the HODL waves today. Any of you who've kind of followed me for a while know that I really do love the concept of coin age. You'll often hear me talk about kind of two concepts more than anything else. One is profit and loss. I'm a huge fan of that because I think it captures so much sentiment. It's massively underexplored. It really is it's a Swiss Army knife of understanding what's going on. But one that is much, I think a lot of people understand it. They think about it, they conceptualize it, but they don't realize the power of it, in my view, is the HODL waves and just the coin age component. Now, what's really neat about this is that coin age and profit and loss are two things that they're kind of doing the same thing. We are measuring a UTXO from the time of creation to the time of destruction, or the price of creation to the price of destruction. And we're basically tracking how long has that coin been held for, how long was it held for, and the HODL waves are essentially our most, kind of popular and common way to visualize the supply based on that holding time. Now, obviously, the most logical place that people go to is, that's long-term, short-term supply, and that is what we're going to look at today. But there's a lot more that goes on. I just want to kind of explore some of the details and look at it from both sides of the equation. Because remember, with the HODL waves, there's coins that mature up through senior bands, but there's also coins that are spent. And I think where people get kind of caught up with this kind of thing is that for the HODL waves, for coins to mature, to become a 6-month-old coin, it has to sit tight for 6 months in order to be spent from a 6 or a 1 year or whatever. It's instantaneous. So the spending is instantaneous. The maturation process takes time. So finding the balance between those two is really what the HODL waves and kind of understanding these different flows of funds matter for. But anyway, let's get stuck into it, and I'll talk through some of the logic and what I'm paying attention to, particularly in our current environment, right? Where we've got a bit of a price pullback. We're coming out of what looks like a pretty nasty bear. Hopefully, we've seen the backside of that. Now we're just going to explore what does this really mean within that context. Okay, so starting with the HODL waves, now you'll often see that I'll look at, so the HODL waves is kind of the BTC denominated variant of this concept. Now, the challenge with BTC denomination is that basically we're looking at the whole coin supply, right, in BTC units. The challenge is that we have these large purple zones, right? Purple and blue and green. And lots of people do get excited when they say, oh, look, 5+ year old coins are pushing to all-time highs, which they certainly are. The challenge is that, do we really care about Satoshi's coins, right? It's got many of the same challenges we have with things like MVRV and correcting and all that kind of stuff. So you will often see me use the realized cap HODL waves for most of my kind of near-term analysis. Why? Because it's going to be proportional. And it's kind of funny, actually. Most metrics we look at, when we look at it in a USD denomination, like price, normally USD things just kind of disappear behind us, right? The further along this log curve of adoption we grow, generally speaking, the left-hand side of this chart kind of fades away to nothing. Well, the realized cap HODL waves is actually one of the few that is the other way around, where BTC, we actually can't trust the old data as much as we can trust the current data. Everything kind of goes out of whack. So the reason why is that every coin that's on the move, we're looking at the total USD value of the network. In BTC terms, Satoshi's coins are worth stacks of money, except they're worth zero on a realized HODL basis. So back then, unless the coin is mobile and active and moving, we actually don't care about it. We don't care what price it has. And the coins that were moved a long time ago typically have a very small price. You can see here we have very little purple and blue, and that is because those coins are ancient. And when they moved, the price was cents, dollars, $100, and compared to now, it's kind of irrelevant, right? $25,000, $22,000. So anyway, let's kind of take a look at this and just absorb what we're kind of seeing overall. Well, the first thing I'll see is note that we've got our lime green curve that's starting to break down. Sorry, let me just turn on. I'm going to test this out. This is new. Presenter mode. In theory, this should get rid of the tooltip. We'll see how this goes. Okay, so, oh no. Okay, so what this thing is seeing, you can note this lime green. This lime green zone starts to really decline, right, and actually grow in terms of overall scope. That lime green zone, that actually didn't work at all. Lime green zone really grows towards late stage bear markets, right? We're coming at the back end of it. In theory, we're coming into the next bull. You can see here, this started really declining in and around the kind of mid 2019 phase, right? Pre-bull. We have this initial leg down. So the concept here is that these are coins that are approximately 2 to 3 years They're in that. I mean, that's pretty old, right? 2 to 3 years are essentially accumulated pre the previous bull, or at the very least, like kind of the coins at the very top of the previous mania, and they've just been held onto. So 2 to 3 years ago, we're essentially in the process of starting our bull run. So we're looking at a lot of coins, and a big chunk of these are going to be GBTC. So just keep that in mind. But in terms of like duration and time scale, no question, we're kind of at that similar phase. But we also need to be remember that this thing, like we're in a macro environment where things may take a bit longer. It's kind of my gut feel. I think things can take a little bit longer over time. The other things that we typically see, here's 2019, great example. This kind of explosive, we saw a lot of coins get revalued to higher prices within the hotter coin bands. Now, we saw that after FTX, but I'll tell you what, just taking a visual cue, this FTX kind of pump, let's call it, it's pretty small. It's pretty small. Like in all things considered, we are still seeing what I would call a incredible amount of hodling going on. There's always going to be some spending going on, but I'll tell you what, after the bear market we just went through, I am quite impressed at how little investors are spending their coins. We are really seeing a lot of entities just sitting tight for now. It's kind of good to see. And really, you can see this by just how small these younger realized cap hodl waves really are. We have not seen any kind of significant explosion. Here's the all-time high. It's kind of equivalent to the 2019, even coming out of the 2016 rally, or the 2015 end of the bear. We still had a lot more hot coin volume. Things are real quiet right now. Now, we can actually see this if we look at our spending analysis. You can see that our transaction volume has fallen off a cliff, like just unbelievably so. There is a bit of a recovery, but it's still, it's massively below the yearly. You may have heard me talk about this, though. This is largely driven by Alameda. Let me just bring up this chart here. I think this is a better view. Same chart, transaction volume, monthly versus yearly, only looking at exchange flows. And the nice thing about this is going to be much cleaner data because it's looking at all the clusters and the heuristics and stuff for exchange inflows, outflows. But what you can see is that we've got a bit of an uptick, but we are still well and truly below our yearly baseline. So overall, the amount of transaction volume that's flowing through, and there's a couple more charts upcoming that will really hammer this point home, it's pretty quiet out there. We're in a very, very quiet period. The chain is not exactly exploding back to life right now. And that kind of shows both conviction, but also uncertainty. It really is still in this kind of eddy current of it's not really sure which direction it is going to go in. Now, what we're looking at here is supply younger than 1 month. The next one will be younger than 3 months. So we're basically starting at the youngest coins and moving our way up. This is a binary system, meaning that a coin is either younger than 1 month or older than 1 month. Right? So the only way for this purple curve here, which is the total supply younger than 1 month to increase, as we saw following FTX, the only way for this to increase is when coins that are older than 1 month get spent at a significant rate. Now, we are essentially plumbing, not necessarily all-time lows. We're almost at 5-year lows. And you can see here, the scale of this purple curve, I mean, you got to go back to 2015 in the absolute pits of the bear to find transaction activity in coins older than 1 month this low. It is so quiet. It's quite remarkable. It's a sign of hodling, but I'll tell you what, it's also a sign of a kind of dead transaction volume, right? I'm not seeing too much liquidity flowing in at this point in time. Here's our supply last active 3 months. So just kind of stepping up, picking up a slightly larger grouping. Note again, purple, extremely low. Absolute pits of bear market levels before you see this kind of supply. I don't know what you call it, like just how little supply has moved in the last 3 months. It's just stationary. It's so quiet out there. It's quite remarkable to see. Total supply younger than 6 months. I mean, you can literally see that this thing is basically at those lows. So scaling from all the way up to coins younger than 1 month, 3 months, 6 months, same story. It's quiet, dead quiet. Nothing is on the move, which again, it's a binary system, so it's telling you something. Here's a transaction volume younger than 6 months. So even within that 6-month cohort, there's not even that much churn going on. Like the chain is just absolutely asleep. Naturally, the supply older than 6 months is therefore not quite at all-time high. Let's have a look at this one here. We will go and look at long-term supply as well. There's a bit of a pullback. The area chart doesn't quite do it justice here. This is actually more important. Note that we have a bit of an uptick in terms of our older supply. Let me just zoom in on like a 1 year basis here and get into the nuts and bolts of this thing. This is kind of the main thing that stood out to me as I was kind of probing before starting this session. Here it is. This is a better view. You can see that our older supply, coins older than 6 months, is coming a little bit off the top. So we will dive in and look at the long-term holder supply variant of this. You can see that we do have a little bit of spending going on as this pullback takes place. Now, I'm actually not too mad about this because in many ways, there's a lot of long-term holders and people who have held their coins for that 6-month period who are still trapped in the previous bear cycle, and they are going to look to take exit liquidity if and where they can. So I'm actually not too surprised about this. It's kind of volume that we will need to chew through in order to get out of here. But in terms of a bit of scale, we are talking about 22,000 BTC. So, I mean, again, we're seeing some spending, but it's also it's still bear market territory. It's not something to be too concerned or scared about. It's just something that it is happening, right? So we're starting to get a bit of a gauge. What we look for in moments like this is does it become a trend? Do we actually see a real big puke out? Now, for a bit of context, this week has been a pretty bit of a doozy, really, in this market. We've seen Silvergate. The news headlines this morning is that Silvergate is winding down. This is one of the biggest banks in the industry. This is significant news. BTC is down $300. Okay. There's been there's continuous FUD against Binance at the moment, which who knows if there's something there. There's short sellers on Signature Bank now as well, which is kind of the second major crypto bank. There's all sorts of regulatory squeezes going on. What else? There's another piece of news. There's just it's just doom everywhere. Checks notes. Bitcoin's down $300. No one's spending. I mean, I don't know. There's just it feels a bit like a bull market. I don't know about you, but it just doesn't seem to want to go down. It's kind of impressive. Now, I just like this chart. This is a supply older than 5 years. I mean, something happened 5 years ago. I mean, what is it? March? What would that be? 1, 2, 3, 4, 5. 2018, 5 years ago. We started a bear market. So what we're basically seeing here is coins older than 5 years. People who bought at the start of the 2018 bear market. In fact, if I had have not sold my Bitcoin, I'd probably be in this. So anyway, if you've got coins that are older vintage than March 2018, guess what? You now show up in the ancient supply. So well done if you've still got UTXOs and sats from back then. Personally, I consider that to be quite the achievement. Now, moving back onto our spending dynamics, I think we had a look at most of these actually, if I'm not mistaken. I think we did. You can see on coin days destroyed and dormancy, we have that similar uptick kind of reflecting that there's a bunch of older coins on the move. I just remembered what that thing I forgot was. There's a bunch of coins being moved around from the Silk Road hacker. And I've also started seeing people being like, oh, no, Mt. Gox unlock is coming up. So there's FUD coming everywhere. And again, I find it kind of remarkable that that Bitcoin is still hovering around here at $300 down from where it was last night. Now, here's some interesting one. In terms of a bit of profit and loss, just before we move on and look at long-term supply, we are back into red territory. So there are more losses than profits being locked in. On the net as well, it's actually quite significant. There's a fair amount of losses getting locked in right now. SOPA took a nice dip down. So, I mean, just be careful here because what we actually want to see is particularly these metrics. Anyone with an advanced plan, I particularly would like to see this metric get back into the green, and I would like to see a SOPA back into the green. So our profit and loss ratio and SOPA, I kind of want to see some upside momentum here because what we're starting to see is potentially a bit of a panic coming in. We could see people who actually do start to liquidate this thing, and once bear market FUD takes back over, I still believe that we're probably still in a more bullish market than not. And I'm quite impressed at how well Bitcoin has held up. But I'm also not going to kid myself and say that, well, if people don't start to get into a bit of a spiral, that doesn't mean we're not going to go down and set a new higher low. That process can still play out. We can still dip down below here. And in theory, I mean, as scary as this may sound, anything above 15,800 would be a higher low, right? So this whole process It can kind of feed on itself. We've got those kind of early spending. In terms of long-term SOPA, we're starting to close the gap. We're finally starting to push back up towards a level of neutral. Short-term holder SOPA has pulled back to 1. So there's a lot of things that I would like to see kind of kick back up. I think if we got a rally from here, that would actually be extraordinarily constructive. I reckon all of your SOPAs would kick back up. All of your profit and loss metrics would kick back up. I think a rally from here would essentially, in my view, I mean, I don't know what the probabilities are that we're kind of beyond the bear. Personally, I sit somewhere in the camp of like 70% that the bear is in the rear view mirror, maybe 75. If we got a rally here and all these metrics went green and we actually pushed to a new, above 25, I would lift that up to something on the order of about 85, 90%, would be my gut feel. So there's just a couple of things I'm paying attention to, just, tracking as this thing evolves. And I think we can leave it there. So let's go and have a look at long-term supply. So we mentioned that we had some spending going on from those older hands. There's going to be a good chunk of those that are coming out of, we looked yesterday at, I think it's about 40,000 that was moved by the US Justice Department. And I think 10,000 of them, 9,800 or whatever it was, got sent to Coinbase. Like I saw a good tweet today, actually. So hang on, you're telling me that the US feds are selling coins to Coinbase and yet they're going to shut down Coinbase? Like, come on. To me, I just don't see these kind of things happening. I think there's a lot of FUD going on, and I think we're basically going to push through it. And in my view, I think the market's kind of pricing that in and saying, okay, is that the best you got? So we've seen a bit of a long-term supply coming off the top here, right? From an all-time high of 14.1 down to 14.05. So there's been about 50,000 BTC that have been spent over the last, let's call it 2 weeks. Now, during a pullback correction, particularly one that's coming after such a significant bear, this is not something that I'm terrified of. In fact, you can see, I mean, in terms of scale, here's FTX. Now, FTX was a big event. So in context, this is not insignificant. But also, this coming off FTX, it's like, is that really all that the market could muster at that time? Let's have a look at the 2018 capitulation. 2018 capitulation. Pretty flat, right? We went to a bit of a stagnant holding pattern. But, 2019, you can see here, long-term holders, generally speaking, they spend in bull markets. They spend in bull markets. They don't really spend in bears. In my view, there's not that much view, right? You can see here, they go stagnant during bears. They spend in bulls, right? I don't know if I said bears before. They spend in bull markets. This is when long-term holders really puke their coins out. To me, as we ride higher, I actually want to see this curling off because it means that long-term holders are spending in a bull. That's kind of the mechanics that you want to see, in my view. Now, I was kind of playing around with long-term supply. There's a couple of traces I want to look at here, and then we'll close up. The first one is, okay, so we've got coins that are starting to come off the front end of long-term holder supply at the moment. So what does that actually mean? Well, the first thing I wanted to do is say, well, okay, what was going on 155 days ago? Let's zoom in on a 2-year basis. So this curve is shifting us backwards. So this is where we were 155 days ago. Well, we were in a very, very quiet and non-volatile period, and then FTX happened. So the important thing to actually note here is that in about, what is this? October the 4th, about November 8th. So in about 1 month's time, well, let's say 1 month and 2 weeks, we're going to see just how much supply, this long-term hold supply, in my view, is going to just start mooning because there's a stack of coins that will purchase after FTX. And this thing here, remember, spending is instantaneous. So the spending that we're seeing here, instantaneous. But there's a stack of coins that are going to mature. The second that we get past FTX and into this zone, all-time high in exchange withdrawals, cheapest prices we've seen in many years, I reckon this thing is just going to go vertical up, right? We're going to see a stack of coins start maturing across that 155-day boundary. Can you believe that was almost 155 days ago or 120 days ago? Man, time flies in this industry. It is wild. Now, the other thing I was playing around with is if we look at long-term holder supply and profit. So compare long-term supply and profit to the long-term supply. Where do you see the big chasm open up? Well, in bear markets, right? Naturally, there's supply that's less in profit. Now, the other thing I noticed is note how, particularly 2019, clear as day, look how much long-term supply and profit starts to look like the price chart. This is because the long-term supply and profit is within the range of the price. So as it moves up and down, it's putting coins back in, back out, back in. Imagine if price is kind of oscillating around the center of gravity of coins, you get a lot more correlation. Naturally, during a bull market, I keep getting this wrong, a bull market, you see this really smooth, it doesn't look anything like price, right? Long-term holder spending, this really smooth behavior happens in bulls. Much more volatile behavior occurs as price is trying to escape velocity from where the long-term holder supply cluster, the concentration is. Naturally, that's because, I mean, imagine we went up to 30K. We know there's a lot of coins up there at 30K. So price is going to move around their cost basis. They're going to be flipping in and out of profit and loss. There's going to be coins changing hands, kind of that process, that road we take back to a new all-time high. So I just whacked on there a correlation. Now I've done a bit of a transform here. Basically, very low levels here shows that there's a very high correlation. So during bear markets, there's a very high correlation between long-term supply and profit and price. During bull markets, we see that that correlation breaks down quite significantly. So you can see here that we are well and truly within bear market territory where price is moving around, it's oscillating around long-term holder supply, and that means that their cost basis is constantly flipping in and out, which means we're going to get a bit of volatility. We're going to see more long-term holder spending. I'm going to spend a bit of time kind of studying this because I'm sure that when we bring in long-term transaction volume and realized profit and loss, we'll start to see some interesting correlations here. But it's kind of interesting how cyclical Bitcoin is. You kind of go through this volatile period where price and the supply are the same, and then it goes into bull market mode where it's like, okay, time to spend, spend, spend. Top goes in, bang, correlation breaks back down, long-term holder moves back into phase two. It's fascinating to me. I find how, these supply dynamics kind of play out in these cyclical realms and investors and all the rest of it. So anyway, look, in terms of a big picture view, I'm cautious, but not with a capital C. I'm just kind of watching and seeing how this thing plays out. To me, it kind of looks like a normal correction at this point in time. When I layer in there the sheer volume, the volume of FUD that's coming out right now, I'm kind of impressed by how much we're holding up. We're seeing realized losses, but we're also in a stage where there's going to be lots of people who are PTSD from the bear that was, right? And they're going to see all this news and they've been waiting for any excuse under the sun to exit their position. In my view, I'm very impressed with how much corn is holding up. And to me, that kind of speaks to a constructive market. Even if a correction from 25 down to 21.7 or whatever it is right now, to some people that's scary. To people who've been here for a little while, okay, you know what I mean? Like, it's not the biggest dip that I've ever seen. Anyway, hopefully that's a useful snapshot, and I will see you in the next one. Cheers.